Well, let's connect with the management and understand the business outlook ahead. Onto the show, we are being joined by Lakshmipathy Deenadayalan, who is the Chairman and Managing Director at 5-Star Business Finance. Hi, very good afternoon. And the first question, let me take it up on the NIMs itself. Your NIMs have improved by over 160 basis points. And we did see the regulatory caps being removed last year. Is that the major driver for this improvement, or this is the nature of the business? What's your view on this?
So good afternoon all. So my NIM is always on little upper side because this is nothing to do with the regulatory cap, because I'm thinking that only for the microfinance sector there was a regulatory cap and that was being removed now. But for NBFC there was no regulatory cap. Why the NIMs of 5-Star are always better is the category of customers whom we deal with. As I said in last show also, 5-Star is a niche player who gets into tier 3 to tier 7 towns and brings the customers from informal lending to a formal lender like 5-Star. So if you see there's a low competition. It is not a crowded market. So we take the advantage of 20 years of presence in this market, and we fairly price it well. Even from the pricing perspective, if you compare the pricing what they get from a lender to 5-Star, it is almost 50% knockdown. So from a customer's perspective, they are very attractive and happy with the pricing what we give them.
Right, Mr. Deenadayalan. This is Vinny joining in the conversation as well, and a very good afternoon to you. I just want to talk about one more thing is that, now banks have actually started passing on those higher costs to the NBFCs. Do you expect to see any moderation in the NIMs because of that going forward, or would you be maintaining these levels?
Even from the liability side, we are very fortunate that our borrowing cost is dropping down quarter on quarter. Only in this quarter, if you take last 1 year where RBI increased the repo rate, from that time to now, only last quarter we saw a small increase from our borrowing cost, which moved from 9.1% to 9.5% incremental borrowing. Rest of the time our borrowing cost was down. If you see the cost of funds from the book, it is still dropping at from 10.5% to 10.1% in this quarter. So we don't see any more increase from banks to NBFCs, because I think the price hike curve is peak. We will see some kind of stabilization here to prevail. Maybe we can see a slight cuts, maybe the end of this financial year. So I don't see the cost of borrowing for 5-Star to go up, and we are very comfortable with this.
Okay, but when we see your AUM growth, that has been very strong over the years, because back in FY15, when your AUM was close to 130 crores, it has now been close to 7,000 crores, and every financial year we have seen an improvement of either 1,000 or 2,000 crores getting added into your AUM. Tell us for FY24, what is the guidance and how do you see the AUM shape up going ahead?
Yeah, before getting into the guidance, the market, what we look into is close to 22 trillion market opportunity in our country. That's the credit demand of single small shopkeepers, self-employed credit need comes from. So taking that number into consideration, what we have grown is not even a dot in that. But having said that, 5-Star was growing at close to a good increase pre-COVID. During COVID, our growth was curtailed around 15%. Now we are bouncing back to the pre-COVID levels. I think that is where you see financial year 23, we registered a 37% growth year on year. Having said that, we see a very strong opportunity, and we had a very superb execution team at the level. So we can easily cross 30% plus in short term, in next 2 years or next 5 years also. The market is abundant. We are able to execute the perfection well, and our asset quality is one of the best. So we don't see any hurdles to do less than 30% in years to come.
Asset quality among the best and don't see any hurdles, but there is a concern, Mr. Deendayal, that despite lending to those low income groups where you see maybe given this current time there could be a default chance which is higher as well, how would you be able to maintain the asset quality? What are you taking as measures for that then?
See, the first point what I wanted to clarify is our ticket size is around 3 to 3.5 lakhs. So we are not lending big tickets to this segment. So as the ticket size is smaller, the EMI also tend to be smaller because we give them 7 years tenure of their choice. So the EMI is as thin as possible. So they don't feel any big burden as if something happens to their business or the family, which often it takes once in 2 years or once in 3 years, we don't see any other specific disruption happening in their lifestyle or the environment so that our asset quality really worsens. So we don't see that to happen, and we are being with them for last 20 years. So our clear belief is we don't want to see defaults. If there is a little bit of delay, we are here to observe the delay and give the comfort to the customer, and it will be paid once the tenure gets completed. So we are very comfortable.
Okay, Mr. Deendayal, thank you so much for joining in with us this afternoon, giving us an understanding on what should we be expecting from the business going forward as well.